Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market trade plan set up for January the 29th. My name's Doug McKay. I am the founder of Quantum Leap Futures and the head moderator. Each morning we come together, take a look at the market macro to micro, take a look at the structure, drill down, and pick our trade levels for the day, our hypotheses, and our targets. If you'd like to be part of this, we do these morning sessions each morning, and then we do live trading and live analysis during the market hours. I'll put my contact information up in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own risk metrics, and your own trade plan. Okay, so if you do want to come and join us, just send me an email at quantumleapfutures@gmail.com. Sorry, I do not have a blog. I do not have a website. This is not really a commercial venture. This is just a group of traders that are dedicated in a self-organized learning environment, and everything is done live in the chat room. If you are going to join, you will need a Skype account. It's free to set up. Send me a Skype contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, you can check out all the other, there's over 300 days of videos up on YouTube. They're broken up in two names. Do search for Quantum Leap Futures. That's where the majority of them are, but there are some under the Quantum Leap Trading as well. And you can see we've done these live each morning for over a year now, and recording them, and you can see what our performance is. If you like what I do, please follow me on Twitter at Crazy2, and let's get going. So first off, I just want to take a look at what happened yesterday. Now, my main hypothesis is Wednesday, Fed Day, we had a neutral to neutral extreme day. So typically on a neutral day, you'll get a neutral day following it. So my main hypothesis yesterday was to have a neutral day, and my thought was that we'd fully auction the middle of the triple distribution from the Fed day, and then probe into both the lower distribution and the upper distribution, creating the neutral day. Well, about 80% of that played out, because we did fully auction the middle. We really auctioned it off later in the afternoon and really filled in and repaired this middle distribution. We did dip into the lower distribution. We played out the statistic to the overnight low, which was a 96% probability, came down and held the low from Fed day, and then they rotated it back up. And then we started getting these big rotations, and the velocity, I think it's got a lot to do with critical mass during the RTH, whereas there's no way that that January is going to go down in the books as a bullish month. So I was saying the velocity of the bears, the buyers are getting timid, and the sellers are getting aggressive, and we kept on getting these aggressive moves down, and they just couldn't let it. I thought when we got up and tested this fractal high here at 92, I thought they were going to let it go and give us our neutral day, and then get continuation up back to the scene of the crime up here at 1904. And they just kept on pushing it down, and they wouldn't let it go. And we ended up closing at 1881.50. There is some repair to do. This is the monthly profile for market. And you can see that we do have some repair to do in this between 91 and 75. So 91 is going to be very important to us today. It's going to be a pivotal point for us. If we can stay above 91, then I'm looking for continuation. The overnight 24-hour you can see that the mode is up here at 97. So we got some nice targets above. Of course, our high overnight, we did go up and tried to get back to the scene of the crime of the Fed number at 1904. We failed overnight at 1903 and a quarter. But I think we're going to see some two-sided trading because we still have to consider critical mass. The bears are going to still get aggressive. I think if we get back into the 1900s, then they might release it and we might get a push higher. Our daily ATR upside target today is still up at that 1924.40. But I'll get into all that in just 1 minute. What I like to do each morning is start my morning off, as you know, with the basic candlestick chart. I use a 9 EMA and a 20 SMA. I start with the month and I work my way up. You can see that our open of the month is all the way up here at 2037.75. It's also the open of the year, and we violated the beautiful trend that we've had for a few years up, and we're now closed below the 9 and the 20 and not likely to get back above there today. With 1 day of trading, our daily ATR is 47.90. So even if we fully auctioned that, it only takes us up to 1924. Even if we doubled it, it wouldn't take us up. It would only take us up into the 1960, 1970 area, nowhere close to that 2037. So we are going to get a negative month. So later in the day, if we haven't gotten up into the 1900s, you could see capitulation. The buyers could step away and the bears could take this thing down. Just, I'm not saying I know that's going to happen. I'm just saying that's a consideration that you have to have in the back of your mind today. Unless we get up above 1900. If we get up above 1900, I think that we might get some continuation higher based on some of the technicals. But anyway, the trend has been violated in the monthly. Going to the weekly, you can see that we do have this downward trend. There is a naked cross up here on the weekly at 2008. It's not likely to be tested today, but it is a longer time frame target that you should be considering. We are still in this technical gap and move up to the 9 EMA is going to take us up into the 1950 area. And remember, we've got that inverted head and shoulder that has not been violated yet on the 4-hour that has a target up at 1964. And then, so the trend, though, is down on the weekly, but we do have room to go up before we violate or challenge this trend. On the daily, we have this symmetrical triangle that we're in right now. They're trying to get, we had this downward trend, and we're getting this consolidation, and they're trying to challenge this trend and take it up. And I'd be watching this triangle today for a breakout. A breakout to the upside is going to be above that 1903.50, basically above the overnight high, and a return to the scene of the crime of the Fed number. The test of the upper, the 20 SMA is going to take you up into the 1913, 1914. And remember, we've got a big target up there at the 1915, 1916 area. But overall, the trend is down, but it is being challenged on the daily. I'm going to just remove these drawings. And then going to the intraday, you can see that we've got this consolidation going here. Here's your inverted head and shoulder right here. Left shoulder, head, right shoulder. Neckline is right in that 1902 level. And above that, we've got a nice measured move. Well, let's just measure it so that we've got it on our chart. So pull up the fibs, take it from the head, take it to the neckline. I'm going to be conservative. Take it to the 1974. And our 38.2 extension takes us to 37 and a quarter. Our 61.8 takes us into the 1960s. And of course, 100% will take us up into the 2000s. So, I mean, if we get above the 1900, you've got this kicking in. This does not get violated until we break that 51 I think it's 51.25 low. So just keep that in mind for your longer time frame. And then moving down in time frames, going to the 1 hour. Now I want you to pay attention to the fact that we've come back and we've taken out most of all of the naked crosses that we've had below. This is one that we were watching here. It got taken out. As I go down, you can see that the trend, down in time frame, I should say, the trend is starting to strengthen to the upside on the shorter time frames. You've got upside trend on the 1 hour. Then you go down to the 30-minute. You've got consolidation, but we had a nice upward trend. We took out this naked cross right here to the tick right here on this candle. There's nothing in terms of naked crosses below us on the 30-minute. On the 15-minute, there's no naked crosses below us. We do have a bit of a downward trend, but they are coming up and trying to violate that trend right now. I did have this naked cross, but they took it out earlier. Going down to the 5-minute, is we had this naked cross right here, but they just took it out on the news. So I had this one right here at the 1889, and they took it out on the news. I had this one right here above us, and they took that out. The next one above us is up here at 1898.99. Just call it 1899. Barely missed it here, but it would still be valid. So we have targets to the upside. And again, we're seeing consolidation here, but we are trading above the 9 and the 20. We are going to create a naked cross here at 1893, 1894 area. So, I still think we could get some two-sided trading until we get into those 1900s. Then they might release it. Taking a look at the bigger picture on the composite, our 9-day microcomposite VPOC is here at 90, and we've got a little CLVN at 91. I'm going to be using this 91 and a quarter area. I'm going to show you why when we get to the shorter time frame. But they seem to accept it. And I mean, I've looked at it every way I could. The only other one that you'd want to pay attention to is this 85, and that falls back into the hypothesis that we've got some repair work to do down in that 85, 86 area. But if we break below the 74 and get below the 2-day value area low, then I think we're going to see some capitulation. And we've got this 64 that they came down to before, but I'm looking at the gap fill down here at 61 1/4. And if we don't bounce down here, there's nothing holding us up. There's nothing down here. So we could have a bigger fall. If we can accept this 1990 and get above the 97.75, or the value area high for the 9 days is up here at 98, you might as well just use 1900. And if we get into the 1900s, of course, we've got targets at 04, 05.75, and the big target above is still in this area between 14 and 16. A lot up here. This is where we tried to hold. We had come back down here from way back over here last time we were here, and we tried to hold it. We held it. They came back. They tried to hold it, and then we fell out of balance, and we created this distribution zone down here and repaired this auction right here. Still a lot of undetermined value in this area. So I don't think we're getting away from it very soon, but I think that if we get back into the 1900s, we could get a push up into the end of the month up here. Below 1900s, I'm watching for capitulation, and I'll be very careful on the upside. So taking a look at the action overnight. I did mention this earlier, but we didn't record it, so I want to just, I was talking about it before we started. Actually, let me, I'll bring up an easier chart to see. We talked about this earlier in the other day when it happened. I took a picture, and then last night when it happened again, I posted it in the room. Just buy. We got a tech gap. We closed the ETH session, the extended trading hours. We closed at the 1882. We opened at the 78.75, dipped down to 77.50, and all you wanted to do is buy. Two reasons. One, you've got the Globex gap, which is a high probability trade. Let me clarify. It's a Globex gap against the ETH close, never on Sundays, never over the weekend. But when you see this, they're going to fill this gap. We also had a technical gap where we were below, and we had gapped down below the 9 and the 20. Now, we didn't get the FUBAR Mr. Sneaky down here like we did the other day this week, which I suggested taking the trade. But this was an easy trade. These are easy money trades. You could have got in on the open. You could have even taken no heat. What? We had the open at 78.75, and the low, this double bottom down here, was 77.50. So, I mean, all you had to do is click the mouse, and then you could have got a nice move up all the way up into the close of the Globex gap at 82. So I just wanted to point that out. So, and then we had a beautiful trade too on the news for Japan. That was a good trade. So let's start moving our numbers. Our overnight low is down at 76.50. Our overnight high is up at 03 1/4. Our overnight VPOC is not going to change much. Inventory overnight is net long. Our VPOC is 93.75, which is basically right at our value area high. Now you can see that the majority of the night we traded in an upper distribution. We had a dual distribution, kind of a P-shaped profile, and the distribution LVN is here at the 90.50 with the value area low at 90.50. Still developing, but it is a developing value area low, and the midpoint all right here at the 90. We also don't really need this now, so we can get rid of this. We also have this LVN at the 91 1/4, and we have the microcomposite VPOC at 90. You got a ton of confluence there. So I'm going to use the 90 1/4 as a trade level, because if we get below that, I can get funded with a high probability move down to this 90 and look for continuation back down into that repair area down here at the 86 and 85 level, with a nice target at the naked VPOC at 85 and the naked close at the 81.50. So I got nice targets down here if we get below the 91 level. An immediate one to get funded, which is high probability, another high probability down to 85, and then another high probability down to the 81.50, with, and especially if we leave our overnight high, a 96% probability of coming down and taking out and getting continuation down to the 75. And as I said, if you look at the repair work that we've got, it takes us, this whole area takes us down into that 75 area. So that's, a takeout of the overnight low. I like that. I'm going to be using the 79 as a continuation trade. I won't, I'm going to get short here at the 91 unless I get a setup here. I'm just going to try to stay short here because there's nothing in between here that I can lean against, really. Unless, we have a intraday setup that we can look at. Above the 91, I've got the value area high and the VPOC from overnight at the 93, 94 level, and I'll use that as well if we come down here and reject the value. We're going to open up. You know, we still got 25 minutes, so they can come back inside of value, but we're going to open up outside of value. We could even open up outside of range. So, you know, if that happens, I got to look for initiative buying stepping in and a test up through the 1900s. Now, the 9-day value area high is up here at the 98. It's also one tick above the 97.75. So I'm going to use the 97, 75, 98 area as a trade area. You could use the 96 and a quarter. I just don't think it's really a good area to lean against because we've been chopping through it overnight. I think you really have to look at the value area. And then above 98, of course, we're looking for 1900, and above 1900, return to the scene of the crime and take out the overnight low up here at the overnight high up here at the 3 and a quarter. And at this point in time, I'm not even really looking to get short up here. I'm looking to stay long in opportunities. Target above is going to be the 575. And then again, into the rule of 10 at the 1910. Now, I don't think that if we come up to this 1910 that we're going to have the same opportunity as we had the other day to short it there. I think this time it's going to break. Well, you know, if we hit the 1910, that'll put a double top in on the daily, and I think they break it and we pop up into this 14 and 15 and 16 level. Next resistance levels comes up into here at the 22.50 now, with a target at 20, and then above there up through our daily ATR target right now based off the overnight low and a daily ATR, we still have range to come up to 47.90. Now, we have not hit our range on the weekly. Our weekly ATR to the upside is 1926, and our weekly ATR to the downside is all the way down here at the 35. So that's why I'm saying be careful if we are not into the 1900s that we could see some capitulation. Our daily downside ATR target is 1855.50. So we still have room to come down here. Like I said, if we get down here, we don't bounce off of the 61 area. I think it's lights out. So those are the targets to the upside. To the downside, below the overnight low at 76.50. I don't know where that switched. Below 76.50, I'm going to be watching the 70 area really closely. The CLVN down here. You do have the 2-day value area low at 74. You could use that as a target, as an extension of the overnight low takeout. Actually, it could be a target and a trade level. So remember, trade levels are targets too. There's just also areas that you can enter into a trade. And then 70 is going to be our key line in the sand today. Below us. For price discovery lower, I think at below the 70, we get capitulation and we get the bigger move down. To the upside, I would be using the, you know, it's going to be tough, but I think you gotta go all the way up here to 1910 as the key line in the sand. I think we're going to see some large rotations today. Okay, and so that's gonna give us our target again. 1901. I'm sorry, 1891. I'm using as our pivotal point. Above it, I'm looking for longs. Below it, I'm looking for shorts. If we get below it, I'm looking for this all to get taken out down here between 85 and 75. Below 70, I'm looking for continuation and capitulation based on critical mass. Above 1900, I want to stay long and into testing this key line in the sand. If they break that, I'm looking for a continuation up into the 15, 16 area, possibly up into the 24s. Not expecting more than that. Just taking a look at the earnings, you know, we had, let me just bring these in. We had Canadian and U.S. GDP. Our GDP came in the same. Advanced GDP quarter over quarter came in slightly negative, but I'm sorry, more slightly positive. And then employment cost index came in as expected. Trade good balance came in, slightly less than expected. Chicago PMI at 945, and then revised University of Michigan sentiment and expectations. Earnings, well, earnings have been, I'm just going to refresh this because we had some more earnings. Earnings, again, for the most part, have not been really bad. A few big misses, but you had some big companies that reported this morning that came out. I mean, look at American Airlines. They came out 2% higher than expected. Colgate came out 1.4. Xerox, where's Xerox? I know Xerox came out better than expected. So, I mean, we're not seeing signs of a deep recession coming in through earnings. So, I mean, the growth is slowing, but we're beating the street. So,
one thing, Doug, is just to note the guidance, the red and the green arrows over there.
Go ahead, talk about it.
Well, just scroll up and scroll down. You can see there are more lower guidance going forward. And it's kind of confusing because, yes, we've had, I guess, a mild beat of reduced expectations for earnings that are being delivered. But on balance, we've also seen more companies guiding lower. And so that's a reason for the chop. It's it's one of those things where the forward-looking view is not disastrous yet, but they are downgrading earnings, and they're continuing to downgrade future earnings guidance. So just keep an eye on those week by week. This week, on balance, they've been mostly guiding lower, and so that's why the market's having a tough week.
Yeah.
It can't make up its mind which way it wants to go.
My larger time frame hypothesis going into next week is a move into the 1900s. We are getting a very good basing pattern here. That does not change my hypothesis to move into the 1900s and possibly fulfill that inverted head and shoulder by a move back up into the 1950 area. Does not change until we break below the 48.75. Below the 48.75, I think next week's going to be a disaster. But with this strong of price acceptance in around this 1890 and keep probing into the 1900s, I think once we get into the 1900s, they got to go into price discovery to find more sellers, and that move is likely to be higher into the 1900s. So, I mean, my overall hypothesis is kind of bullish right now into next week, and that does not change until it gets below my key support level at 1948. Do I know which is going to happen? No, but I'm going to trade it like it's going into the 1900s starting on Sunday night. Anyway, that's going to be be our look at the ES. Just take a quick look at the Keltner right now. Our Keltner center line is sitting right at our overnight VPOC. Below there, the test of the developing value area is going to bring you down to that 91 level. And if we break that, move down to test the lower Keltner is going to take us into the 88 area, more likely down into these 85s. If we hold above the Keltner center line, a move to the upper Keltner is going to take us to test the 1900s, and the developing value area high on the 24-hour is up here at 91.75. Gold is the wrong gold chart. Where's my gold composite? There we go. I don't know why I keep losing this profile. Gold is, found a little bit of weakness, but it's now holding the 3-day microcomposite VPOC here at the 1116. And we're still holding above the breakout of the microcomposite range that we just broke out of. If they don't hold and they break below this 1100, then you got to be thinking 1106 and to move back down here to test the 1100 in the microcomposite VPOC that we based on. If we can hold this level and hold above the 13, look for them to grind up into the 1120. If we move, the indices moved into the 1900s, we're going to see gold come back a bit. It doesn't change my longer term hypothesis that we're going to continue in 2016 to grind back up towards this composite VPOC. This is still a very strong magnet, most traded price going all the way back to 2008. So, my longer term is still long on gold, but we might have to take another dip down. My uncle line is really going to be below this 60 area, 58 to 60. Below that, we've got nothing below us, and I think we'll take a bigger move down in gold. It's just they're finding, gold's not falling out of bed yet. So that's what I'm looking at in gold. I'm not going to be trading gold. I don't trade gold on the last day of the month today. As always, that's going to complete our pre-market session. Trade well, trade safe, and we'll catch you on the flip side.